Every product has certain key features you as a buyer should fully understand, and dental malpractice insurance is no exception. There is one concept that directly impacts how your policy functions, responds to claims, and ultimately influences the premiums that you'll pay. I'm talking about occurrence versus claims made insurance policies. If you're a new dentist, you've probably heard these terms already, but may not fully grasp what they mean or how they differ. If you already own your own practice, you likely have one of these policy types, but you might not have a clear understanding of why you chose that policy beyond what your agent recommended to you. However, knowing the differences between occurrence-based and claims-made policies is vital, as it significantly affects your coverage and potential liabilities. In today's video, we'll clearly break down these two policy types, helping you better understand how they work, why it matters to your practice, and how to make the best choice for your current situation. So if you're interested in gaining clarity on this essential aspect of your malpractice coverage, stay tuned. Welcome to Insurance by Dentist, where we are dedicated to educating and simplifying insurance for dental professionals. My name is Orrin Pearson. I'm the Vice President at Insurance by Dentist and author of the book Insurance for Dentists Malpractice Edition. Thank you so much for joining me today. We bring brand new videos to you every week, so if you enjoy this video, make sure to like and subscribe for more content. Let's jump right into today's topic: occurrence versus claims-made dental malpractice policies. I want to kick things off with a quick overview of how we're going to tackle today's topic. First, we'll cover three important terms: retroactive date, tail coverage, and prior acts coverage. Getting familiar with these right at the start is critical because they're going to pop up often as I explain the different policy types. Understanding them now will make everything else much clearer as we go along. Next, we're going to dive into both policy types. We'll clearly define each one, walk through real-world examples, and discuss which type of dentist each policy suits best. Finally, we're going to wrap things up by comparing them side by side, so you'll leave today's video with a clear idea of which policy type might be right for you. So let's jump right in and start by exploring what a retroactive date is. A retroactive date, which you'll find exclusively on claims-made liability policies, is essentially the date listed on your declarations page that determines how far back your coverage extends. Think of it as your policy's memory. It covers claims from incidents that meet two conditions. They must have occurred on or after the retroactive date, and they need to be reported while the policy is active, or during what's known as an extended reporting period, often called a TEL. An important thing to remember is that as long as your coverage remains continuous, your retroactive date won't change. This means your policy maintains your entire prior act's history. However, even a one-day lapse in coverage can reset this date, potentially wiping out years of past protection unless you purchase nose or prior acts coverage or maintain a TEL policy. In short, the retroactive date is your policy's way of looking back in time at your past work whenever a future claim comes up. Let's walk through an example to see exactly how a retroactive date works in practice. On January 1st of 2020, Dr. Rivera purchases her very first claims-made malpractice policy. Her insurance company sets January 1st, 2020 as the retroactive date, clearly displayed on her policy's declarations page. Now let's say that Dr. Rivera performs a crown procedure on March 15th of 2021. Several years later, on June 30th of 2025, that patient files a lawsuit alleging that the crown procedure failed. In this scenario, because the treatment occurred after the retroactive date of January 1st, 2020, and the claim was reported while Dr. Rivera's policy was still active, the lawsuit filed in 2025 is fully covered. Now let's compare that to another situation. Imagine another patient who had a filling done on October 5th of 2019 before the retroactive date was set. Fast forward several years, and on July 10th of 2025, that patient also decides to sue. Even though this lawsuit was reported during the inactive policy period, the treatment itself happened before the retroactive date. So Dr. Rivera's policy wouldn't provide coverage in this situation. Now that we've explored how the retroactive date works, let's move on to our next important term, tail coverage. Tail coverage, also called an extended reporting period endorsement, is an add-on you can purchase for your claims-made malpractice insurance policy. This allows you to report claims even after your policy has been canceled or non-renewed, as long as the claim relates to work you performed while the policy was active and on or after the retroactive date. In practice, you pay a one-time premium to secure an extended period. This is often 3 to 5 years or unlimited, during which any lawsuits that arise after your policy is ended are still covered. Essentially, tail coverage preserves your policy's memory without requiring you to keep paying annual premiums. Now let's talk about how insurers set the price for tail coverage. Tail coverage is typically priced as a one-time surcharge based on your last claims made premium. Insurance companies usually quote it as a percentage multiplier of that final premium. Once you pay this one-time premium, the extended reporting period endorsement locks in coverage for the time you select, which is often unlimited. So what do these multipliers actually look like in today's market? Well, for physicians, multipliers typically range from around 150 to 250% of their final premium. For example, the AMA recently noted that doctors typically pay around 200% of their last premium for standalone tail coverage. Now, for dentists, these multipliers generally run a little higher, often in the 200 to 300% range. Sources like the White Coat Investor highlight this range, saying that tail costs usually land somewhere between double and triple a dentist's final annual premium. South Point Insurance, a dental-focused broker, also states that tail coverage typically costs about twice the annual premium. Likewise, MedPro Group's national data shows tail coverage for a dentist running from about 160% on the low end to 290% of their expiring premium. Several key factors can push the price of tail coverage up or down. First, your specialty matters. If you perform high-risk procedures like surgeries or cosmetic work, you'll typically face higher multipliers. The policy limits you choose and how long you've had your retroactive date in place also matters. Higher limits or longer retroactive periods tend to increase the insurer's exposure, driving the cost higher. Your state's legal climate is another big factor. States with more challenging litigation environments like New York, Florida, or Illinois generally have higher tail costs. Your personal claims history plays a role as well. If you've had prior losses, your insurer may apply additional load factors, increasing your final costs. Finally, the length of the tail period makes a difference. While unlimited tails usually run around 200% of your premium, opting for a shorter 3 or 5 year tail could save you about 20% to 40%, depending on all the factors. One last thing worth noting, many carriers offer significant discounts or even waive the cost entirely under certain conditions. For instance, insurers often provide tail coverage at no cost or deeply discounted if you've held continuous coverage with them for at least 5 years and retire after age 50, or you become permanently disabled or pass away while covered. Now let's move on to our final key term, prior acts coverage, also commonly known as nose coverage. Prior acts coverage is essentially an add-on or sometimes even a built-in feature of a new claims-made liability policy. This extends the new policy's protection backwards, reaching all the way to your original retroactive date. This means that claims arising from work you performed while under a previous policy remain protected, even if the incident itself occurred before your new policy started. In other words, prior acts coverage bridges the gap between your old policy and your new one. This ensures that you're not left exposed to claims related to past treatments or for past procedures that you have performed. Let's look at an example of prior acts or nose coverage in action. On January 1st, 2018, Dr. Ellis purchased her first claims-made malpractice policy. Her insurance company set the retroactive date as January 1st of 2018. Let's fast forward a few years to July 10th, 2022. Dr. Ellis places an implant for patient A. Now let's say at the end of 2024, Dr. Ellis decided to switch insurance companies. Her new insurance company issued a claims-made policy that includes prior acts coverage, honoring that original retroactive date from January 1st of 2018. Then on May 5th of 2026, patient A finally files a lawsuit alleging the implant Dr. Ellis placed back in 2022 failed. So what happens next? Well, because Dr. Ellis's new policy includes prior acts coverage, it preserves the original retroactive date from January 1st of 2018. This means that patient A's 2026 claim is fully covered, even though the treatment occurred before the new policy started and the claim was reported after the switch. Without this prior acts coverage, Dr. Ellis would have either needed to buy tail coverage from her old insurance company, or she would face the risk of having the claim denied altogether. Alrighty, now that we've covered all three key terms, let's move on to explore the two main types of dental malpractice insurance policies. And I want to start by looking at an occurrence malpractice policy. An occurrence dental malpractice policy provides lifetime protection for any claims related to treatments you performed while the policy was active, no matter when a patient decides to file a lawsuit. It could be next month, next year, or even 20 years down the road. If the incident took place during the policy term, coverage is locked in permanently. Because this type of coverage stays in place indefinitely for each treatment you perform, you won't need to worry about purchasing tail coverage or prior acts endorsements if you retire, change insurance companies, or take a break from practicing. The trade-off, though, is that occurrence policies typically have higher premiums up front, since the insurance company is taking on the responsibility of covering potential claims far into the future. Let's take a look at an example of an occurrence form policy in action. Imagine Dr. Smith has an occurrence form dental malpractice policy that's active from January 2020 through December 2020. During this coverage period, let's say on June 15th of 2020, Dr. Smith extracts a wisdom tooth for patient M. After her policy expires at the end of the year, Dr. Smith switches insurance companies on January of 2021. And importantly, she doesn't purchase any tail coverage from her previous insurer. Fast forward several years later, on August 10th of 2026, patient M decides to file a lawsuit alleging nerve damage from the wisdom tooth extraction back in 2020. What happens here? Well, since the treatment occurred within the original 2020 policy period, Dr. Smith's occurrence policy from that year kicks in automatically, even though the lawsuit is filed 6 years later. She doesn't have to worry about having bought tail coverage or prior acts coverage. The protection was permanently locked in the very moment that she performed the treatment. This means that Dr. Smith is fully covered for the lawsuit, even though she stopped paying premiums to that carrier many years ago. Now let's talk about situations where an occurrence policy really makes sense for you as a dentist. First, it's great for dentists who might move around often, whether you're a recent graduate, a military spouse, or an associate dentist who expects to switch practices or even states regularly. The big advantage here is portability. With an occurrence policy, the coverage for any procedure you perform is locked in the year you do the work. That means you won't need to keep buying expensive tail coverage every time that you move or switch jobs. FDA Services even calls occurrence coverage highly portable, ideal for dentists who aren't yet certain about their long-term practice locations or career plans. Next, an occurrence policy is also a good fit if you're a dentist who works part-time, moonlights, or does locum tenens work. In these cases, having your own occurrence policy clearly separates your side gigs from your main employer's claims made policy, ensuring you're always protected without having to worry about tail coverage when those side gigs end. Risk Strategies highlights how valuable occurrence coverage can be for dentists splitting their time between multiple offices, since it automatically covers those extra working hours without additional complexity. Occurrence coverage is also very attractive if you're within about 5 to 10 years of retirement, planning to sell your practice, or considering an extended sabbatical. Because occurrence policies include lifetime reporting rights, you won't have to pay a large lump sum for tail coverage when you walk away from your practice, something that can easily cost between, like we mentioned, 150 to 350% of your final premium. MedPro Group and the White Coat Investor emphasize this advantage, noting occurrence policies don't require you to budget for that big expense at retirement. Additionally, if you're a solo practice owner who values simplicity and wants to avoid any administrative headaches, occurrence coverage offers clear benefits. With occurrence policies, each policy year stands on its own. There's no need to track retroactive dates, prior acts clauses, or worry about extended reporting endorsements. Gracie Backer specifically notes that reducing administrative burden and providing lifetime protection are two major reasons dentists opt for occurrence coverage. Finally, if you're practicing in a high litigation state and you prefer financial certainty, occurrence coverage can help you lock in your costs up front. While the initial premiums might be higher, you'll avoid future tail coverage price spikes that often occur in states with frequent and expensive lawsuits. Given that tail coverage multipliers in tough litigation states can reach 2 or even 3 times your annual premium, occurrence policies can protect you from that long-term cost volatility. Great, now let's shift gears and talk about the other main policy type, the claims-made policy. A claims-made malpractice policy protects you as long as 2 conditions are met. First, the alleged incident must have occurred on or after the policy's retroactive date. Second, the claim must be reported to your insurance company while the policy is still active or during what's known as an extended reporting period, often called tail coverage. One important thing to keep in mind is that if your claims-made policy is canceled, lapses, or you switch insurers without arranging additional coverage, no new claims can be reported for past incidents. That means maintaining continuous coverage is absolutely critical. You'll either need to purchase tail coverage that we've talked about when the policy ends, or ensure your new insurer provides prior acts coverage to protect your previous work. Now, because of these requirements, claims-made policies put significant emphasis on maintaining your retroactive date without any gaps. Let's walk through a real-world example to see exactly how a claims-made malpractice policy works. Imagine Dr. Lee carries a claims-made malpractice policy from January 2020 through December 2023. Her retroactive date, the date printed clearly on her policy's declaration page, is January 1st, 2020. Now, during the active policy period, Dr. Lee performs 2 key procedures. On March of 2021, she completes a root canal for a patient. And on October of 2022, she replaces a crown for another patient. Let's say the crown patient files a lawsuit on August 15th of 2023, still within the active policy term. This claim is fully covered because it meets both key conditions of a claims-made policy. The treatment happened after the retroactive date, and the claim was reported while Dr. Lee's policy was still active. But now let's consider what happens next. Dr. Lee decides to retire at the end of 2023 and cancels her claims-made policy without purchasing any tail coverage. Fast forward to May 20th of 2025, the patient who received the root canal treatment back in 2021 files a lawsuit. This time, Dr. Lee isn't covered. Even though the procedure was after the retroactive date, the claim was not reported until after the policy ended, and since she didn't purchase any tail coverage, there is no protection whatsoever. Finally, let's look at one more scenario. Back on November of 2019, before her policy's retroactive date, Dr. Lee extracted a patient's wisdom tooth. That patient later files a lawsuit on July of 2021 during Dr. Lee's active policy period. Unfortunately, even though the claim was reported while her policy was still active, the procedure happened before her retroactive date, so this claim isn't covered either. Now, the key takeaway here is simple. A claims-made policy provides protection only if two critical conditions are met. First, the treatment must have occurred on or after your retroactive date, and the claim must be reported during your active policy period or during your tail coverage period. Otherwise, you'll need to rely on tail coverage or secure prior acts coverage from a new insurance company to stay protected. Now let's take a moment to discuss the types of dentists who typically benefit most from a claims-made malpractice policy. First, claims-made policies often make the most sense for established or long-term practice owners who plan to stay put for many years to come. After the first 4 to 5 years, claims-made premiums typically level off and end up cheaper than occurrence policies for the same amount of coverage limits. And if you're stable, you get rewarded with lower premiums over time. Next, claims-made coverage can be a great fit if you work for an employer, like a DSO, hospital, or large group practice that has agreed to pay for your tail coverage when you leave. This way, you benefit from lower annual premiums without worrying about eventually having to pay the large lump sum required for your tail coverage yourself. That eliminates the biggest financial downside of claims-made policies. Additionally, practices that expect to grow significantly or raise their liability limits over time also benefit from claims-made policies. With this type of policy, if you increase your limits down the line, those higher limits automatically extend backwards, protecting all your previous work. You won't need to buy separate excess tail coverage to increase protection retroactively. Claims-made policies are also well suited for dentists who are just starting their private practice and need lower initial premiums to help with early cash flow. Typically, claims-made policies start out about 30% to 40% cheaper than occurrence policies, phasing in gradually over several years. This helps new dentists manage their budget better while building their practice. Finally, claims-made policies work well if you're moving from one claims-made insurer to another, especially if your new insurance company provides prior acts or nose coverage. This means your new insurer might honor your original retroactive date, letting you seamlessly continue your coverage without having to buy an expensive tail from your previous insurance company. Here's a quick rule of thumb to keep in mind. Choose claims-made if you're confident you're going to stay in the same practice long term and want lower ongoing premiums after your policy matures. On the other hand, opt for occurrence coverage if you think you might switch jobs frequently, moonlight, or retire soon, and don't want the hassle or expense of buying tail coverage down the road. Alright, now that we've looked closely at both claims-made and occurrence malpractice policies, I want to put them side by side and see how they stack up. First, let's talk about the coverage trigger, the event that activates your protection. With a claims-made policy, coverage kicks in only if the claim is reported while your policy is still active, and the original incident occurred after your retroactive date. By contrast, an occurrence policy is simpler. As long as the incident happened during the policy period, it's covered permanently, no matter how many years later the claim is filed down the road. Next, let's consider the retroactive date. A claims-made policy always has a retroactive date, and that date determines how far back your coverage reaches. If your coverage lapses, even briefly, this date resets, potentially leaving you unprotected. On the other hand, an occurrence policy doesn't use a retroactive date at all. Each policy year is entirely independent. Now, what about tail coverage? If you have a claims-made malpractice policy, You'll usually need to buy tail coverage if you cancel your policy or switch insurance companies, unless your new insurance provider provides nose coverage. With Occurrence policy, there's no need for tail coverage, since each year's coverage is permanently locked in as soon as it ends. Now let's talk about premiums. Claims made policies start with lower premiums, often about 40% to 60% of what you'd pay once the policy matures. The premiums gradually climb for 4 to 5 years and then level off. However, eventually you'll need to pay a separate tail premium, typically 150 to 300% of your final annual premium. Occurrence policies cost more from the start, but there's no surprise tail costs down the road. Now, in terms of portability and flexibility, claims-made policies are only portable if you carefully manage prior acts coverage or tail endorsements. If not managed well, gaps can emerge. Occurrence policies, however, are automatically portable. You can move or retire freely without needing special endorsements. What about administrative complexity? Claims-made policies require careful tracking of your retroactive date, policy lapses, prior acts coverage, and tail obligations. Occurrence policies are simpler. You don't have to manage retroactive dates or deal with extended reporting periods. So who typically benefits from each type? Claims-made policies often work best for dentists in long-term stable positions, especially if your employer agrees to cover tail costs. They also suit new practice owners who want lower initial premiums and can budget ahead for the tail expense. And if you expect to increase your coverage limits over time, claims-made policies let those higher limits apply retroactively. Occurrence policies, on the other hand, are ideal for dentists who frequently change jobs or locations, dentists who moonlight or work part-time, and those nearing retirement or selling their practice who want to avoid paying a large lump sum for tail coverage. They also suit anyone who values simplicity and doesn't mind paying higher premiums up front. The bottom line is claims-made policies help keep your initial costs down, and they provide flexibility in raising coverage limits over time, but they require diligent maintenance of continuous coverage and planning for tail expenses. Now, occurrence policies cost more upfront, but they free you from the complexities and the expenses of tail coverage, making them especially attractive for dentists with mobile careers, side gigs, or retirement on the horizon. Alright, we covered a lot in today's video. We started by breaking down 3 important key terms: retroactive date, tail coverage, and prior acts coverage. Then we took a deep dive into the 2 main types of dental malpractice insurance policies, which are occurrence and claims-made policies. We then looked at examples of each in action. Finally, we compared both policies side by side to help clarify which might be the best fit for your specific situation. The key takeaway here is that there's no single best policy. It's all about matching your insurance to your career path, your financial goals, and your practice needs. Whether you're planning for retirement, frequently changing practices, or just getting started, knowing how these policies differ empowers you to make the right decision. That's going to wrap up today's video. Thank you so much for joining me today. If you found this video helpful at all, please hit that like button and subscribe for more content. We release brand new content every week. If you're interested in learning more about dental malpractice insurance or this specific topic in general, be sure to check out my book, Insurance for Dentists, Malpractice Edition, linked in the description below. I'm Warren Pearson, Vice President at Insurance by Dentists. Thanks again for watching, and I'll see you in the next video.